Okay, so you've decided to apply to Standard Capital. This video is application tips on how to maximize your chance of getting an interview or being funded by yourself. PB and I are going to be reviewing and interviewing all the companies, so you're looking at the people that will be reviewing your application. So to start with, PB, what makes a great application to Standard Capital? What are you looking for?
Well, we're looking for great founders and a great business. So first of all, can you explain what you're doing? This is always the hardest question with any startup is what are you doing? Generally speaking, if you can't explain what it is, you're probably not going to be successful. So, clarity of communication is important. Secondly, is this a big opportunity? Is there a path to where this could grow into a $100 billion or even $1 trillion company? And again, this is important. It doesn't always have to be like a easy path. It could be sort of insane. OpenAI, when we started that 10 years ago at Y Combinator, seemed pretty insane. But now here they are raising at a $500 billion valuation. And then, what is your evidence of product market fit? We want to see that you have actually made something people want. So, there should be evidence that customers are buying and you're on the path to growing.
That makes sense. Maybe some thoughts I would have is the video matters a lot. We watch the videos, we pay attention to the videos, and it's a great way to see communication style. We also pay a lot of attention to the demo. So the product matters. It needs to be a good product. And if you're applying for a Series A, you probably have a product.
I hope so.
And so, seeing the quality of the product does matter a lot, and we're going to pay attention to it. I think another thing to note is growth matters a lot. How I think about growth is I imagine what a 50th percent startup would have in terms of growth. And I will benchmark an application to that, to what I think the 50th percentile is. And what I'm looking for is a company with far better than average or 50th percentile growth. Does this make sense? And so I've read so many applications over the years and I'm familiar with so many YC companies. I have a pretty good idea about what average looks like. And I'm looking for evidence of greatness. I'm looking for someone that's in the top 5 percentile or better across every metric, whether it's efficiency, return on ad spend, retention. I want to see fantastic retention. And so you should just be thinking about how your startup would benchmark across other similar startups with a similar go-to-market, and always just try to demonstrate that you're the best of the best. That's what I'm looking for.
Absolutely. And a high level of ambition, right?
Yeah.
Is this something where you're just aiming to be kind of middle of the pack, or are you going to be best in the world?
And so I know we're going to get a lot of questions about this, so it's good to cover on video. How should founders think about naming their own price and choosing a valuation? This is very different than how most founders think about raising priced rounds, is that you just make up a number and then the investor makes up a number and you just hem and haw, and there's both sides are willing to give a little and you hope you end up in the middle. So that's pretty different. It is the case, though, that at YC Demo Day, founders do name their own price. And so it's not the first time someone has tried this before. What rubric would you give to founders as they're trying to decide?
Yeah, absolutely. I mean, you should be aware of the market. You should be aware of where similarly staged companies are getting priced. And generally, we want to see something that's market price. We don't want to overpay, but we're also not asking you to take a deep cut.
Yeah, I think another note is because we're doing 10% dilution deals, your aggregate dilution is pretty good versus taking a 20% bite. And so you may see companies announcing their rounds for lots of money, but not disclosing what the valuation is. And presumably they're probably taking 15 or 20% dilution, perhaps even higher. That's probably not the best bet.
Exactly. So one thing that oftentimes venture investors will do is actually push companies to take more money than they need. And the reason they do that is because they're trying to increase their ownership stake. They're trying to get up to 20 or even 25% ownership. And so when we say that we will do 10%, that doesn't mean that we're doubling the valuation. That means that we're giving you the option to raise a smaller round than you might otherwise do.
And why would that be a good idea? How should founders decide that it's the right idea to have a smaller round versus, oh, we have a land grab situation, let's raise whatever crazy amount?
Yeah, assuming this is a fast growth business, what you want to do is raise enough money to reach the next milestone, and then hopefully you can raise your next round at 4x the valuation, and then you get a lot more money for a lot less dilution. And again, this is something that you and I have seen a lot because we've been working with founders for 20 years, and they very often get excited, raise a whole lot of money early on because it looks like it's free money, and then by the time they get to their Series C, they're wishing that they still owned part of their own company.
Yeah, it's funny how much variance there is. I can think of cases where public companies ended up with the founder owning less than 5%. I won't name any names. In some cases where the founder owns a tremendous amount. And so there's actually a lot of variance between successful companies on how much the company the founders own. And the biggest, most dilutive round that companies tend to take is the Series A. And so of all the things that you can do to impact how much of your company you'll own at exit, how much you raise in the A or how much dilution you take is the biggest lever you have as a founder.
Absolutely. And this is another indicator of strong founders. When we look at top founders like Zuck, they have made a point of retaining ownership in their companies. They don't just give it away. They're not sloppy with raising more than they need at a low valuation.
Okay, so here's another application question. How does a company know that they're ready to apply? Like, what is the right time to apply? Is there such thing as too early or too late? How would you think about that?
So arguably, it's never too early to apply. You just won't get accepted, but we love to see people apply early and multiple times. It shows that you're committed and that you're working on it. So even if we don't fund you the first time or the second time, we might fund you the third time that you apply. But in particular, what we're looking for is clear signs of product market fit. We want to know that you have made something that people want and that you're now at the point where you're going to scale it up. What we don't want to fund are companies that are still searching for the product, companies that are still looking to pivot, companies that maybe don't even have an idea yet. They could still be a great company, but that's a better fit for Y Combinator.
I think my usual advice on this is if you're seriously considering it and you spend a lot of time ruminating on maybe you should apply, you should probably just do it.
Yes.
Because this is a classic example of a minimal downside bet.
Yes.
Like, what are you investing an hour or something to fill out the application with unconstrained upside?
Exactly.
So
if you think you should apply, you should apply.
Yeah.
And even if you don't get in, the exercise of filling out the application is good for you either way, right? It helps you think through the fundamentals of what is the business you're in? How does this get to be a huge business? Who are your competitors? How are you going to win? These are questions you should be able to answer very quickly anyways. So if it takes you a long time to fill out the application, probably you needed to spend a lot of time. Probably that was a good thing for you to do.
I think it's a great preparedness exercise. We're intentionally asking questions about market size and market opportunity. And yeah, I think it may be a really good thing to go through those questions and answer them. And if you don't have good answers, it might be something to look at. So PB, what type of startup are we looking for? Are there any verticals or types of startups we actually will or won't fund? Like, what guidance do you have for founders out there wondering about this?
Absolutely. So we're essentially interested in funding any company that could be a huge success. So our vertical is $100 billion to $1 trillion companies that could be in a lot of different areas. However, we do expect most of them will be taking advantage of AI. So if we look historically at what companies reached this threshold, whether it was Microsoft or Google or OpenAI, whatever it may be, it always happens because of an underlying technological shift, whether it's microcomputers or internet. Mobile phones enabled the rise of Uber and DoorDash and TikTok. And so every time there's a new technology, that opens up a whole new world of opportunities for startups. And AI is a huge technology and it's just getting started. We know the models are going to keep improving, technology is going to keep improving. And so we think that there's going to continue to be new opportunities for new startups to grow huge that would not have been possible 5 years ago or even 2 years ago.
And so we are open to hard tech and bio and
Absolutely.
all those things are things we're interested in, right?
Yes, any vertical, as long as there is a path to it growing into a huge company. And again, part of it is like the question of why now? Why is now the time that this could have been started and not 20 years ago? And so we would expect the answer in many cases is because somehow we're leveraging the power of AI or something downstream of AI to do something that wasn't previously possible.
All right, well, thank you so much, PB. That was application tips from the two that will be reviewing your application. Thanks, everybody.